Well, the market was down again today, pretty much on the back of losses which we saw in Dangote Cement. Obviously the most capitalized stock on the market, and anytime that stock moves, it usually has a bearing on the market. Joining us to give us his thoughts on the trend we're seeing in Nigeria and a little more focus on the banking sector is Babatunde Obanuyi, an analyst with Afrinvest. Thanks so much, Tunde, for joining us on the show. Let's first of all get your views on the market trend. We've seen the market come down a little bit today, but one can argue that if Dangote was flat, the market probably may have ended even higher. What's your thoughts on the trend we're seeing?
Well, it's just a correction of the rally we've seen in the couple of weeks, the last weeks that we've seen. And I think some people are trying to book their profit, Of course, we expect to see some oscillation, volatilities in the market. So that's what we're beginning to see. But like you said, when you have a stock that has like 25% of the market, it tends to dictate the direction of where the market goes. So that's like 25%. So when a Dangote Cement is down like 4%, it's definitely going to probably have a great impact on the index, and that's what we've seen today.
Let's focus a bit on the banks, and particularly the rescue banks today. Obviously, this week a lot of people are anticipating news on MOUs signing
to be signed.
The banks and of course, obviously the new investors into those banks. Let's maybe take a few of those companies and get your thoughts. First of all, we're hearing FCMB is in the picture for FinBank. I mean, using that as a hypothetical case, obviously there will be confirmations as we go along. What are your thoughts on the impact that that kind of deal will have on FCMB?
Well, thank you. For me, I would say FCMB and FinBank, though we've not confirmed, but just to use it as an hypothetical case. Well, it's going to be a synergy sort of. Looking at FCMB model, they tend to be very strong on the corporate banking side and treasury. And when you look at FinBank, it can also give them an exposure to the retail market, to the retail segment of the market. So by the time you blend the operations of the two banks that are coming to merge, as in the case of an FCMB and FinBank, then it gives them a pedestal to be able to compete with some top-tier banks, and it's probably going to launch them on the path of being one of the top-tier banks in the market. Because this market, though we say is not a matter of size, but we still find out that size really, really matters in this market. You find that like 4 top-tier banks dominate like 75% of the loans, of the deposits. So people are still struggling for that space, for the dominant space in the top tier segment. And this would be a good avenue for a bank like FCMB to launch itself.
So for you, a major game changer there?
Of course, yes. It's going to be a major game change. It's going to have an impact on their business model. For instance, you focused on the capital market business, on the treasury side. Definitely, you have to look for how to carry along the retail markets. These are emerging markets where we have people in the middle class driving growth, and definitely there are enormous opportunities in that segment of the market. So even if you have a balance sheet on your side, like you have a balance sheet of let's say $3-4 billion, you still need to find a proper avenue in which to deploy this capital you're sitting on, all your assets. So this is going to give them more opportunities, more platforms to deploy the capital if you want to play in the retail segment, if you want to play in the corporate, or if you want to just do treasury and the capital market. So they have more avenues for them to deploy their capital, and I think that will give them an opportunity to use it to the optimal use.
Another scenario that a lot of people are speculating is Union Bank and a group of investors, including Africa Capital Alliance. Now, obviously, this is not another bank joining Union Bank. Union Bank used to be one of the largest banks in Nigeria. What bearing do you think that kind of deal would have on the company's fortunes going forward? It's going to be,
it's going to have a good impact for Union Bank. Going by that, looking at pre-2004, prior to the consolidation we had, for Union Bank happened to be the largest bank in Nigeria, and it's a bank with so much potentials. But we found out that lately, during the phase of the consolidation, these last 5-6 years, they've been unable to really move along with the evolution that we're beginning to see. So you find out that they still sit on a lot of assets, they have potentials, but you need to inject fresh ideas into the bank, and I think that's what the people that are coming will bring on board, which will be strategy for Union Bank. Before now, you can benchmark a Union Bank with a First Bank, but First Bank has been able to, throughout all this process, be dynamic enough to move with the changes, and they're still able to assert their position as a leader in the market. But now, Union Bank with the potentials, if they give room for the new ideas to come in, then that will bring in the innovation that we've been waiting for, that the market has been waiting for. So it will be like a wake up of a sleeping giant.